Hello, everyone. My name is Randall Hoffman, and I'll be hosting you today in this three-part webinar. Thank you for attending Crow's webinar on e-commerce and especially on the movement of stock. This is the first part of a three-part webinar that we are delivering live on 3 consecutive days. Before we begin, we wanted to cover some housekeeping items. At the right side of your screen, you will see a chat box and a poll questions box. Your microphones are muted, but in case you have any questions, you can post those questions via the chat box, and we will answer the questions on the last part of this webinar, or do it via email if the question is more comprehensive. Please note that we do capture all questions. A copy of today's slide deck will be available to all the webinar participants. The video replay will also be available shortly after this webinar, and you can use it via the same registration link. At the end of the webinar, you will also be prompted to write a short evaluation form. I'm happy to say that we have managed to gather a great team of experts for you today who will share some of their valuable experience and advice. The agenda for the coming days is as follows. So today we will cover the EU commerce, e-commerce and stock movement, especially from a B2C perspective. And that will be hosted by Peter Emsten from our Crow Belgium office, and Peter van den Heuvel from Blackman. And he, of course, has a lot of experience with 3PL services. Tomorrow we'll be covering customs from an EU side, but also from a UK side. And the last part on Thursday will be on platforms. So the old rules for platforms, the existing rules for platforms, and of course the new rules for platforms that will come in place shortly. But today, our first speaker is Peter Emsten, and he will lead you through the rules of B2C e-commerce. After that, Peter van den Heuvel will lead you through the rules of e-commerce, but from a practical experience as a 3PL provider. But before we go to these two speakers, firstly, we want to have a poll, especially on what is your role or how do you see these new rules of e-commerce that have come in place on the 1st of July 2021. I will start the poll right now. And the poll has ended. So results, not surprisingly, but the rules should have made it easier to do business in the EU, especially from a VAT and customs perspective. But what we see now that it is more complex. And that's because we have an overlayer of rules when you have warehousing available, when you import, when you also supply to B2B instead of only B2C, it has become more complex indeed. I'm not going to say any more right now because Peter will cover those new e-commerce rules. Peter, handing it over to you.
Thank you, Randall, and good afternoon, everyone. Let's first start off with a short overview of the rules and then some practical cases to see whether the rules that have been implemented as of the 1st of July 2021 have indeed materialized in a significant reduction of administrative costs and burden for e-commerce players. The background of the change of the legislation in 2021 was basically to reduce the burden for traders. The legal framework for e-commerce before 2021 was quite burdensome. It could lead to multiple VAT registration obligations in different countries. Secondly, we also saw that under the old rules, there was quite a tendency for unfair competition from third country e-commerce sellers, for instance, out of China. In order to manage those risks and to reduce those burdens and basically build a single digital European market, the new rules were implemented. In a nutshell, the rules came down to, most importantly, the abolishment of the thresholds for distance sales. So as of the 1st of July of 2021, in principle, your B2C intercommunity sales, your distance sales, were subject to local VAT in the country of your consumer. There was a small threshold of 10,000 euros under which the seller could apply local VAT from his member state of establishment, but in practice we see that this threshold is barely used because it's quite limited in its application. Obviously, as you have to apply local VAT in the country of your consumer, that will lead basically to a larger compliance cost. In order to offset that burden and to avoid having to register in all the countries where your consumers are located, a simplified reporting system was implemented. The OSS system, which was essentially an extension of the old MOS system, allowed sellers to report all distance sales in the EU via one OSS return in a member state of the European Union. Which member state that was, we'll touch upon later. The last two changes were the introduction of the IOSS and the implementation of a fiction that made facilitating electronic platforms deemed suppliers. As Rendel mentioned, these two changes will be dealt with in our webinars tomorrow and on Thursday, so I'll not touch upon those changes in this webinar. We'll focus mainly on the intercommunity distance sales regulations and their practical difficulties. What we see in practice with e-commerce is that a lot of our clients have multiple sales structures, and which can lead to quite a complex administration. You have in most of our clients have multiple warehouses selling to B2B clients, B2C clients, transferring goods between warehouses, and also exporting goods out of the EU. So this is quite complex, and local VAT registrations remain applicable. Hence our question, have the new rules as of 2021 actually reduced the burden for traders? As you can see with this overview, it's really important as a seller to know your supply chain. It's determinative of your VAT obligations and your it really determines your complexity within your sales structure and within your sales management structure. So let's see, with the first example, what the application of the OSS entails. So let's say we have a French supplier which has a warehouse in France, and he makes distance sales to consumers in Spain and Germany. Let's say he does not apply for the OSS scheme. In this case, he principally needs to register in all the delivery countries. There is the threshold of 10,000 euros per year, obviously, but again, the practical relevance of that threshold is in practice very minor. So X, if he does not apply, our French supplier, if he does not basically use the OSS scheme, he has to file local VAT returns, has to pay local VAT via those returns. He will need to invoice and apply local invoicing rules. So quite complex. Let's say he uses the OSS scheme. Where does he register? As this supplier and seller is a French, so EU established seller, he will apply for the OSS in France, the member state of establishment. Let's consider that he's not an EU established seller. Let's say he's British. In that case, you have two options. If the British seller has a fixed establishment for VAT purposes, then in principle, the member state of the fixed establishment is the member state to register. Unless there are multiple, excuse me, something went wrong. In case if there are multiple fixed establishments, then there is a choice for which establishment and which member state to register. Note that this choice is binding for at least 2 years. If there's no fixed establishment, then the member state of dispatch, or in case there are multiple member states of dispatch, or in a situation where you have multiple warehouses, then there is a free choice of registration. You can basically opt in which member state to register for the OSS. The benefit of the OSS scheme is obviously that there is one single return via which he can basically pay the VAT to the relevant tax authority within the EU. Let's say same situation. However, our French supplier has a warehouse in Germany. For instance, a French supplier uses Amazon, which has a main fulfillment center in Germany, and he sells to a Spanish consumer. In this case, obviously, the French supplier will be registered in France as a normal business. However, he will also be deemed or obliged to register in Germany, as he will be, based on the transfer of the own goods, he will be liable for VAT registration in Germany. So basically, his compliance burden will be 2 VAT registrations, and obviously he has an OSS registration for his B2C sale to the consumer in Spain. So again, 2 VAT registrations and 1 OSS registration, which in our opinion is not really a simplification. Let's indeed see, okay, the situation, same situation, but with a non-EU supplier. Here you have your import of goods into the German warehouse. If the goods are imported directly into Germany, you'll have a VAT registration obligation in Germany in principle. If, on the other hand, you have an import in another EU member state, let's say France, Belgium, or the Netherlands, you may also have to register in the country of import. In some countries, obviously, there is a simplification. You have a type of fiscal representation whereby you can import the goods without having an own individual VAT number, but that option is limited to a few EU member states. The non-EU supplier obviously can also register under the OSS scheme and can apply it for his sales to B2C clients in other member states. In this case, he will, as a non-EU established supplier, in this case, he does not have a fixed establishment, so he will be registering for the OSS scheme in the member state of dispatch of the goods. Again, quite a heavy compliance burden, given that the OSS scheme was deemed to simplify things. Let's discuss the situation where you have a fixed establishment. So you have your French supplier with a fixed establishment in Germany. You also have a warehouse in Germany. So obviously, what is the compliance burden here? On the one hand, you have your transfer of the goods from France to Germany, from your production facility to Germany to your warehouse, for instance. You have your VAT registration in France as a normal VAT taxable person. You'll have your VAT registration in Germany in order to acquire the goods or make the deemed acquisition of the own goods. And then secondly, obviously, you have your sales to the end consumer, which also requires an OSS registration. In many cases, we also see that distance sellers or sellers in the e-commerce sphere do not mind or do not take into consideration local B2C supplies. So in this case, in this scenario, we have a scenario whereby a German seller has a warehouse in France and sells out of that warehouse to customers in France. The transfer of the goods will lead to a VAT registration in France. As a German VAT taxable person, he will also be obliged to have a local VAT registration in Germany. So he will have two normal VAT registrations. But what is noteworthy here is that the local supply from the French warehouse to the French consumer is not does not fall within the scope of the OSS. So that local supply cannot be reported under the OSS scheme, although it will attract a local French VAT. So the compliance burden here is two VAT registrations. I see there is a small mistake in the slides. So the OSS registration is not needed here, unless obviously the seller also performs sales, distance sales to consumers in other EU member states. For instance, if goods are transported from the French warehouse to, let's say, a consumer in Germany or in Belgium, those would qualify as EU distance sales because there would be an intra-community transport. And then in that case, you would be able to sell under the OSS scheme. What we see in practice and what we see that leads to the most issues is situations where a seller has multiple warehouses. In this case, the seller, a German seller, has a warehouse in his own country and a warehouse in France. Again, you'll have two normal VAT registrations in Germany as well as in France in order to make the deemed intra-community acquisition in France. But additionally, you will have one OSS registration for which transactions that will be the transactions or the sales to the consumers, the French consumers, out of the German warehouse. And those will be the sales that will be within the scope of the OSS scheme because they're intra-community distance sales. For the sales, the B2C sales out of the French warehouse to the French consumers, in this case, again, it's a local supply and it will not fall under the OSS scheme. Again, quite a complex structure and quite a heavy compliance burden. And then let's make it more complex even. This is a bit the Amazon Pan-EU model, whereby you have, for instance, a seller, a UK seller, that brings in goods to a central warehouse in Germany. Amazon, for instance, has a solution whereby they are allowed to position goods already close to the customer and are allowed to transport your own goods out of the German warehouse to other facilities that they have, fulfillment centers, for instance, in Belgium, in Netherlands, in Poland, or in Spain. In that case, Amazon will transfer the goods out of the German warehouse to, for instance, in this case, French warehouse. That warehouse, as the goods will not be owned by Amazon, but the ownership will be retained by the British seller. In that case, the British seller will need to register for a VAT registration in Germany, but as well in France. For an inter-community transfer, he does not know about that. Amazon does. And you can even expand this because there are multiple fulfillment centers. So it might very well be that there is a subsequent transfer of goods from the French warehouse to the Spanish warehouse. So this all can be quite complex, and a seller using, for instance, these types of services like the Amazon Penny Use solution does not always know in which country he needs to register. So it can be quite complex, and it can create quite a heavy compliance burden, especially if you're yourself liable or responsible for your VAT compliance. What we have seen with clients is that they receive basically data extracts. They can pull it out of the Amazon platform, but they really struggle to structure that data and report all the transactions correctly, meaning the transfers of the goods and the local supplies to consumers, the intra-community supplies to consumers. It's really a difficult and it's a painstaking effort to do that compliance on a periodical basis. So as we look at these examples and as we look at the rules as they are now, we see that the simplification may not always have come to fruition. And the question is whether this system is in the long term the most viable. A possible solution could be the SVR, the single VAT return that is being planned, or the OSS 2.0, but this remains to be seen what will be implemented in the long run. So let's hope that a facility or a simplification, additional simplification, can be achieved within the e-commerce sphere. But at this point, we see that although the legal changes in 2021 were intended to result in a simplification for sellers, we see that in practice, everything in the e-commerce remains quite challenging from a VAT perspective, and does not necessarily lead to a reduction in the compliance burden and compliance costs. And with that, I would like to raise the question. Have you already seen a simplification in your practice? Have you felt that you could cancel VAT numbers? Let's put up the poll. So I think the response is indeed quite conclusive and in line with our assessment of the situation. We see 33% indicating that, or 30% indicating that it has not really significantly reduced the costs and administrative burden. And even a larger portion, about 40%, says that there is, in fact, no material impact or simplification as a result of the implementation of the OSS scheme. So indeed, conclusions are quite uniform and in line with our assessment of the facts and what we see in practice. And with this, I would like to ask Peter van den Heuvel of Blackman to share his practical experiences with the new e-commerce rules.
Okay, thank you, Peter. A lot of Peters today in one presentation. So I will try from my end to give some insight because I'm working for a 3PL for Blackman. I will try to give some input on what Peter has just mentioned on rules and the complexity, how I or how our clients are dealing with it and where they are struggling with. So maybe just a few words. Blackman, sure whether you heard about it, but it's a logistics end-to-end partner for fashion and lifestyle brands. So we are dealing with clients that are basically a lot of your vendors because everybody is buying a lot of clothing online. So we deal with all those kinds of brands. We have different service lines: warehousing, transport, freight, customs, also including some VAT elements. We try to help clients with this kind of struggle that Peter also explained. We have a footprint in Belgium, Netherlands, UK, and US. Expansion is planned, and there are on a normal working day about 4,000 employees. If there is any kind of Black Friday event, this can be up to more than 5,000 people. So we are deeply involved in the whole e-com world. If I just mention a few words on the clients that we have and how they are structured, they are mainly non-EU and EU sellers, but a lot of non-EU sellers. So imagine that if we have a client which is based in US, not having any experience with VAT, you can imagine the struggle that we have to explain even the simplified version of this OSS or VAT rules to those kind of customers. So it is a challenge in general. Our clients, they have a B2B, B2C portfolio. We will mainly focus on the B2C today. Their key markets are either EU. A lot of the foreign traders, they also have a big UK market. There is also if they have warehouses in Europe, they also deliver to the rest of the world, like US, Canada, and the rest of the world, also including Switzerland, is an important market. What we typically see in our area is that the clients mainly sell on a DTB basis, which makes it for VAT in a lot of cases very complex by dealing with importation, that will be touch base later on the customs part, but also on VAT that becomes a cost non-recoverable under the sales of DDP. How do our clients bring the products in? So we see a lot of, if we look into the products that are shipped into EU or UK, it's very often in bulk shipment. So there will be bulk entries into EU or UK. Either the goods are imported. Luckily, we have a lot of clients in Belgium, Netherlands, so they can apply for this import VAT deferral, which is an advantage. Or what we also see is that our clients, if they are selling a lot of their products B2B, B2C to non-EU countries, that they opt to bring the products first under a bonded warehouse regime, a bonded customs warehouse regime, which I'm not going to explain in detail because that brings us way too far, but that's what we see with our clients. If you want to know about the Brexit impact, because we have seen also the impact of Brexit with our clients, we see that either if they only have one warehouse in EU, that they have the products under a bonded status to be able to move them easily to UK without have to pay twice the duties, or we see that our clients are making a split and they really make a dedicated warehouse for EU and for UK. That's the footprint. That's what I see with a lot of clients. in the next couple of slides, I'm gonna jump into the impact for a VAT on selling products on the market. I've also tried to use some emoticons. I know that my kids for sure they like it if I make those slides very, very colorful and with emoticons. But the reason why I've put them there is basically to indicate where our clients and myself, where we see the advantages or disadvantages, problems with the rules as they are. For B2B, very brief, the solutions are rather straightforward. Clients that are selling on a B2B portfolio, the rules aren't that complex. Goods are imported and distributed from 1 or 2 countries. They have VAT number in the country of arrival, so no OSS and whatever. And they apply the regular rules for domestic sales with or without VAT if reverse charge exists. They might sell within the EU as a free exempt or a VAT exempt intra-community sale. There might be exports outside the EU also exempt from VAT. In certain cases, they also move the products under bonded status, although I see that happen very or not that often. If we jump into the European market, so meaning B2C sales or B2C deliveries within the EU, where the OSS will come in scope, we see this quite often, that our clients, that they bring the products in bulk within one of the EU member states. They have their own VAT number because they need to customs clear the products. They might have import deferral license. And from there, they sell the products B2C to the customers across the EU. In most of the cases, so Peter explained a lot of more complex scenarios. What we often see is that the scenarios aren't that complex and that we have a client that has a central warehouse in one of the countries and start shipping within the EU from that warehouse. So for the basic setup, and in a lot of cases, the only setup for our clients, so if they sell within the EU, then I'm pretty satisfied about the setup of the OSS. So what happens? The client brings in products in bulk, start shipping individual packages to European B2C customers. They apply the VAT from the local country and they report everything in the one-stop shop return in their either in their home country if it's EU trader or in their OSS in number or VAT return in the country of arrival of the product. The main impact or one of the advantages is that for the one-stop shop, the normal one, there is no impact on the threshold because a lot of our clients, they have products which are over a threshold of 150, to which I come in a second. Is it all nice and bright? No. We also see some disadvantage on the B2C deliveries and the application of the one-stop shop. And I think that's also the example which Peter, or the examples that Peter mentioned. Clients are struggling. Luckily, we don't have a lot of those, but clients are struggling and are very confused when the rules become more complicated when they have multiple warehouses or multiple inventories. They might end up with different VAT numbers. They might have to charge VAT on some local transactions if it's shipped within a country. So if warehouse and customer are in the same country. So it's, believe me, very complicated to explain to a client who might not be established in EU, so not an expert in VAT, that in certain cases they need to apply their own VAT number. In certain cases, they need to apply their OSS, and a shipment to one and the same customer, depending on the inventory, might lead to OSS, non-OSS application. So whenever it comes to multiple inventories, I think there is room for improvement on the EU level to make that more simplified. The other element, which I'm not going to deep dive into, is sales under a consignment model. So products are with a reseller still owned and then sold through some kind of platforms that we also see as a burden because the rules on consignment stock and so on are not really clear. So clients do not even know whether they need to have a VAT number or whether they need to have a VAT number. The Zalando model that Peter also explained, this is for our clients very confusing. So whenever it comes to more locations, then it's becoming very unclear for our clients. That's why the unhappy emoticon over there. In next scenario, the B2C deliveries via the electronic platforms. This will be also touched based on in the next session, but I would like to give at least the insight from what I see here from my perspective is it is an upcoming market. So we see more and more electronic platforms and clients that decide rather than have a e-com platform or an internet platform sale in their own hands, is that they work with third parties and that the third party will do the whole show for them and that they only sell as a B2B sale to those platforms. So it's a trend. Will all clients do it? No, but it is something that we see that could lead to a improvement, at least for some of the clients. What is definitely not clear is when does the product when does the ownership move. So the idea as such on the platforms is nice, but the practical details lead to a lot of questions. So hence the not fully clear scenario. iOSS, I know this will come into a next session, but from my experience, our clients or the clients that we deal with, they hardly use iOSS for at least the main reason is the threshold. So if you need to split constantly your flows between below 150 euro for a trader, it's very, very complicated. So most of the clients are not really applying it. On the other hand, if they bring goods for B2B and B2C in bulk within the EU, and if they would put it under a customs suspension bonded warehouse regime, of course, the iOSS will not work. So is it easy? No, it creates a lot of complexity, but on the other hand, we hardly see it with our client database. A few words about deliveries to UK. That's the other scenario. We see a lot of our clients that have inventory, for instance, in the Netherlands, who will ship on a DDP Incoterm basis to their clients in the UK. The experience is quite messy. We see a lot of problems and clarity with clients how to deal with it. One of the reasons is the burden or the threshold of 135 GBP. The rules are different if you're over or below the 135 GBP. The complexity, who will be the importer? Should I apply the sales VAT? It creates a lot of frustration, misunderstanding by clients. So they bring products into UK. They do, if the value is above 135 GBP, they need to import the product. They pay the import duties and VAT. They are under the assumption that they can recover the VAT. It turns out that the import document is not 100% correct, so they are not able to claim the import VAT. So we see a lot of unhappy clients or doubtful clients with this UK B2C deliveries. Hence the reason why we have clients that decide to split their warehousing and put a stock in UK to avoid all those distance sales rules with the UK. Last but not least, the rest of the world, which also includes Switzerland, Norway, and so on. Those kind of sales are rather straightforward for the simple reason that, in some of the countries, indirect tax or VAT isn't really existing, so there isn't not a negative cash flow impact for clients. They charge it at the cash out and that's it, so they don't have to worry on recovery. Of course, in some of the countries like Switzerland, Norway, but also other countries outside EU, they also implement the system with threshold and with sales VAT. So overall, our clients are happy with the situation shipping to non-EU or the rest of the world. Whenever it comes to the countries that have implemented the sales VAT threshold, then the most of the questions will arise. And then, of course, they are happy that they can work with a 3PL or with an advisor to help them on explaining the rules. This was my brief or short explanation or announcement about how our clients deal with this one-stop shop. Maybe some small poll to close this topic. So the question is, do you use a 3PL? Yes, it's very helpful. Yes, but we intend to do it ourselves. No, or no, but we are attempting using a 3PL. The votes are still coming in. So the results, I'm happy to see that it's a 50-50 because that's good, at least for what I'm doing. So that clients work with a 3PL or that they want to switch. But it's something we mainly see that in the industry that we are in, that clients work very often with a 3PL to avoid any establishment or setup of companies in one of the countries. Thanks a lot.
Thank you, Peter. I think we have room for some questions. One of the questions, I think it's for Peter from Blackman. Does a 3PL check whether the goods exceed the 150 euro threshold?
Of course, when they are imported, the value might be different. But normally, if goods are shipped to any country, it's the treatment. So we check indeed whether the value is exceeding the threshold or not, because the rules are, of course, different. And we see that very often with clients that ship products into UK, because there, of course, it is an advantage for a client whether the value is below, because then they don't have to pay duties. So for VAT, it's not really a must-have because VAT might be recoverable, but for duty, it's of course an opportunity if it is checked whether the value is below or over the 135 or the 150.
Okay, one other question. I think that's for Peter from Crow Belgium. Do we still need local registrations if we only sell B2C? I think we know the answer, but...
Sorry, Rendel, can you repeat?
Do we still need local registrations if we only sell B2C?
If you only sell B2C, well, basically you can have your OSS scheme applied. That will be quite a significant reduction in your administrative burden. But again, as I mentioned, you can have your other transactions, your transfers of goods, and your local to local B2C sales that can trigger local VAT registrations in other countries than your country of establishment. So yeah, it's really looking at your supply chain and assessing what your reporting obligations are and where your VAT becomes due.
Okay, I think we have room for one more question. How do you deal with return of goods? That's maybe a practical question for Peter from Blackman.
It depends on whether the goods are returned from EU or non-EU. So I think within the EU, it works pretty simple. There isn't a lot of extra complexity. Whenever goods are returned from non-EU countries, of course, there is the famous option to apply for return goods relief. And that will be explained, I guess, in the next session about customs, because then there will be a money saver or a cash flow advantage for clients that bring products from non-EU countries.
Because I can imagine, especially in the fashion industry, a lot of goods are returned because your size is not good, etc.
Yep.
Okay. Well, thank you. I think we've come to the end of this part of the trilogy, discussing warehousing, movement of stuff, etc. And although the EU tried to make it more simple for clients to be present in the EU and to trade in the EU, we've seen that if you have multiple warehouses, local sales, return goods, then it's probably more difficult than it was before. But again, if your supply chain is quite simple, you only sell B2C, don't have warehouses, then OSS is a good solution. Thank you all for attending. Thank you especially Peter and Peter. I hope you will also check in for the next webinar tomorrow and the one on Thursday. Tomorrow, EU and UK customs. Thursday, platforms and new rules. And please reach out if you have any questions. See you all tomorrow.
Thank you.
Bye. Thank you.